Hello traders, the title of the video is all around chart analysis, tips and tricks one must grasp. Let's get started. The financial instrument that we are analyzing is Tractor Supply Corporation, EPIC TSCO, Tango Sierra Charlie Oscar. This is an American stock that belongs to the consumer cycle specialty retail. All right? And we want to talk about all around chart analysis, tips and tricks one must grasp. I would like to recommend to traders to watch the full length of this tutorial so they may improve their chart analysis. All right. So in an uptrend, we are expecting the financial instrument to display higher lows and higher highs. So you may say to me, George, I already know this. Yes, but I encourage you to stay with us, okay, as we are, okay, developing this topic. So higher lows, higher high, very important. In an up move, the price will be in a rising channel. This is the rising channel is indicating to us that the bullish momentum is increasing as long as the price stays within the bond, stay inside the rising channel or above the rising channel, forming higher lows and higher high. But then, okay, if the price fails in an uptrend to form a new higher high, so there was this high here, you see, right, and then followed by, okay, a higher low. If the price failed to form a new higher high in an uptrend, or instead form equal high, you see here, this was equal high, or a lower high in comparison to the prior high, this will indicate to us that the bullish momentum is diminishing. So you need to understand when we use the word momentum, we are talking about the speed of the price, the rate of change of the price. This is about the momentum. There are other things involved with the price progression. We talk about the fuel is the trading volume, how much people are buying the financial instrument. It's about the fuel, but the speed is about, okay, the momentum. All right. So here we have a warning that this bullish momentum is diminishing. So we do not need anything else to tell us that. We can see that the price itself, the number one indicator, has failed to form a new, okay, higher high, alerting us that there is a high probability that the price will start going down. But we do not just sell straight away because, okay, high probability that you go down. We implement a different time frame trading method to trade it here. All right. So you can see that rising channel. All right. We can always remember that we can draw also the median line of that channel. This is the median line of that channel. All right. So when people are selling here, their first profit target, the first profit target is this median line here, because the price can pull back all the way to the lower part of the rising channel and can find its support on the edge and start going up again. Though the warning is here, it doesn't mean that the price will definitely go down. That's why it's so important for us at this junction to use, okay, a different time frame trading method. So one trick that you can do also, you see this was the equal high, yes or no, okay? So it's forming higher lows, higher high, higher lows, higher high. Now we have equal low. What you can do is to use, okay, the pitchfork tool. In this case, we apply it to this low here. So there was this low, this high. You apply it to this high and this low here. So we apply it like this. Hold on, please. You apply the pitchfork tool like this. Oops, I'm moving some of my line, which I do not want to. I'm going to put it back nicely now in a moment. You get a message. Okay, this low, that's it. So that's it. So the equal high is here, all right? So we drop it down. We use this high before the equal high. We can also have, instead of having an equal high, we can have a lower high. So understand that. So either equal high or lower high, indicating to us that the bullish momentum is diminishing. So now we move to the next high. So we apply pitchfork tool to this high, to this low, all right, and to this low also here. So we go backward a bit and we apply the pitchfork tool. Price went up, pull back before displaying the equal high or the lower high. So you see, by applying the pitchfork tool like this, all right, on this chart, you see it came out of this channel. This will be, you see the blue channel, so minimum target here. Normally, the price should bounce up a bit here, but you can see that people were selling it so fast, all right, after the common set trend line is broken. Are you with me? Oops. I don't want the video to be too long. I'm under time pressure now. Okay, this common set trend line is kaput. All right. If you want to catch it, because I'm on a monthly chart, if you see the equal high like this, you say, all right, I don't want to wait until this monthly candlestick bar is closed. You can drop it down lower time frame, the next lower time frame, which will be the weekly chart. So you see one weekly candlestick bar closing below that common set trend line, and then you implement a top-down trading method to sell it down. Your first target is the median line of that rising channel, and your ultimate target is the lower part of that channel. Because the price still in the rising channel, the information that we have is that the bullish momentum is diminishing, but it can diminish, which means the price can go down all the way to the lower part of the channel and then start going up again. But this one here, attention please, I haven't finished here. This will, you see, now we have a double top followed by a lower high. This one here, this is a high probability, a bearish signal. A double top followed by a lower high is just a high probability trading setup for swing trading and position trading. Common sense is kaput. Observe the candlestick pattern here and implement a top-down trading method, a different trading method to sell. That's what's happening here. So this is a high probability trading setup, this one here. All right. Why am I moving this line non-stop? I don't want to move it. All right. All right. I haven't finished here, my friend. There's something else I want to show you, okay? Talking about all around chart analysis, tips and tricks. I haven't finished yet, so you see now. So price in an uptrend will form higher lows, higher high until it fails to form a new higher high, all right? But what the pattern that we usually see at the end of a bullish trend is either a double top or a head and shoulder chart pattern. So those are the reversal, all right, reversal chart pattern that we often see at the end of a bullish trend. So if I ask you now, how do you recognize the end of an uptrend? Very often we'll see either a double top. There are various types of a double top. So when we are talking about double top, people think that it's equal, always equal top. Sometimes you may have one top like this, and another top will be a little bit high, and then the price will come back below the prior high. So this was the prior high, price goes up here. Now the price will come back below the prior high and find a resistance. That is also a double top. Very, very important, all right? Don't forget that, all right? So we see either double top or a head and shoulder chart pattern. Those are the patterns that we see at the end of a bullish trend. So here, this is a gigantic, okay, a top, because it's a double top in 5. But it's forming the head of a head and shoulder chart pattern. Can you see that? So this is the left-hand side shoulder, and now we have the right-hand side shoulder. So at this junction here, talking about all around chart analysis, what is happening now? Okay, so you remember what I said to you, okay? The most important thing you need to understand in financial market is that the price is always headed to a target level. So now that the professional recognize this, hold up, let me remove some of my line. Identify that head and shoulder chart pattern. They will set a target and they will set a midpoint target. So they will measure, okay, the height of this head and shoulder chart pattern. Head, this is the head, this is the left hand side shoulder, this is the right hand side shoulder, and this line here is the neckline. So they measure the depth and they'll project it down. I encourage traders to watch the full length for this video, as you will see soon that it's not finished here. That's why I say all around technical analysis. So now they set their target, they will say, okay, this stock, talking about tractor supply operation, may go all the way to $24. By the way, this video is for educational purposes only. It's neither solicitation or an offer to buy or sell Tractor Supply Corporation. All right. So that will be their ultimate bearish target. But they will set also the midpoint target somewhere in the zone of $42. Let's call it $42. Okay. Yeah, somewhere in that zone, $42. Come on, $42. That's it, somewhere there. Okay, so that's the midpoint target, which is corresponding to this double bottom here. You see, right from the support here. So that's the midpoint target. Why do you need to know where are those target level? Because the price is always headed to a target level, and the best trading sector will occur around that zone. There will be trading activity around that zone. So professional will love to bring it here or ultimately here. Now, I doubt it that you come all the way here. The first one you are watching is at the zone in the zone of $42. Okay. So this is what somebody who is just analyzing the chart, looking at the head and shoulder chart pattern will say. But there is another group of market participants that are not looking at the chart, that are not looking at the head and shoulder chart pattern. So you have to understand that if the financial instrument is bullish, and now the bullish momentum is diminishing, and the price finally exhibits the first lower high, which is here, we have a high chance that we may see a correction. Price may come down a bit, may decline for a while before going up again. All right. So usually we will see either a double top or a head and shoulder chart pattern that will alert us that okay, this bullish momentum is getting a bit weak, and we are likely to see a bearish momentum, a strengthening. But apart from the chart pattern, using the projection setting price target using either double top or head and shoulder chart pattern to set a target in a down move, whether one is using area way pattern, corrective waves, or one is trading normally just the chart, talking about chart analysis, one should also be aware that at the end of an uptrend, apart from the chart pattern setting target like I did now, professional will also use market geometry. So you want to understand the drill, all right? At the end of an uptrend, we can use the chart pattern to set target down, to identify the possible reversal point, as I did now. But don't forget that professionals are also using the market geometry, which is the projection of the first channel, which is the rising channel. Now we measure the width of that channel and we project it down. A lot of technical traders are not aware of it, and they don't know how to handle the correction first when the price starts pulling back. So you want to know, you want to understand it, and apply it consistently so you do not miss out. Okay. So here it is. So what I'm doing now, I'm using market geometry by measuring the width of that channel, all right, and I'm projecting the direction of the price, and I draw a line that is parallel to the first channel. That's it. So now price is out of that projected channel. I project it again down. All this exercise is to map out the chart to set a possible reversal point. So by projecting the first channel, I know that there's a line here. Price can change direction here. Now I'm projecting it one more time. I want to know where are the levels that the price is more likely to change direction. Again, it's all about target level. The price does not move for no reason, all right, and is always headed to a specific target level. So we use the chart pattern at the end of an uptrend to set target level, as I did already. We also use market geometry to set a target again, so we do not miss out and know the possible reversal point. By drawing those lines on our chart, you will be amazed how the price sometimes will stop exactly at a specific key level. Price does not move for no reason. In the financial market, never. It always headed to a specific price target level. Use market geometry, use a chart pattern to project to set a target level. So now I have it now. My projected channel. Okay. Anytime you draw a channel, don't forget the median line of that channel. Okay. You can see the first projected channel. Draw the median line. It should be somewhere here. You see, as the price came out of the first channel, it came down. Okay, let me call out the first channel into red. You see it now? Price always came out of the first red channel. it came down to the median line of the second channel where it changed direction here. So if you're on a monthly chart, you see it pierce through like this, drop it down. Now, once this candle here is closed, go back to the weekly chart, wait for the first candlestick bar to turn around, and then implement a top-down trading method. Same thing you will do here. It came back and catch it here. You see that candle inverted hammer there. Now, if you want to catch it at early stage because of the monthly chart, go back to the weekly chart, wait for the first bearish candlestick bar to close on the weekly chart, and then implement a top-down trading method. Price going down. Watch out for the key levels, which we have already on the chart. So now that it's coming down, again, we have a third channel. Are you getting it now? So you don't want to forget the horizontal levels, which we use the chart pattern for. And you don't want to forget the market geometry. Again, we have another channel here, the third channel, the red channel. We don't want to forget the median line, all right? Anytime you draw a channel, remember the median line. So for those who are trading this stock, professional traders are monitoring the reaction of the price in this zone right now. Right? So you see it's corresponding to the top here. See here before we use this double bottom here, now we are using the top. Okay, somewhere in that zone. Okay, call it a $52 zone. Professional are monitoring the reaction of the price in that zone. Going to color the neckline into peak. That's the neckline of our head and shoulder chart pattern. All right. All right. So somewhere in the zone of $52, the price, we will see whether there's a reaction or not. So all we'll say now, if you want to sell, you want it to break below 52, retest, find a resistance, and then take it down to the lower part of the channel. If it come out of that channel, now we are back into the last channel here, and so on, and so on, and do not forget the horizontal level. All right. If there will be a reversal, it will be somewhere, okay, near one of those lines. So the price moves down 1, 2, 3. So where is it going to stop? Is it going to continue to go down more? The ultimate target for the chart pattern trader in the zone of $24, midpoint target 42. So we are watching the zone of 42 level, which is the midpoint target for the head and shoulder chart pattern traders, and also the intersection between, okay, the third channel. So this zone, so another level. Oops, finally I moved that line again one more time. Keep moving it, all right? So this zone here, the zone of $42 and 52, watch it out, okay? And trade like a pro, meaning that use a different time frame trading method. Quickly to show traders, I use the low of August 2011 and the low of October 2014 to connect this point and this point to draw the first line of my channel, and I use the high of May 2012 to draw another line that is parallel to the first line. That's how I draw my first red channel. So you can do exactly the same thing for your chart and go through it one step at a time. There is a neckline at a $60 zone, right? Midpoint target at $42 zone, and ultimate target in the zone of $24.26. Remember that one should also use market geometry and project the channel in direction of the price. The strategy is very simple. You're looking for, all right, a high probability trading setup. Then you implement a different time frame trading method, okay, without violating the trading triangle, the market first, the sector, before the individual financial instrument. Check the economy news, the fundamentals, all right? If you have any question or suggestion, okay, put in the comment section, and in due course, I will be recording another video to answer your specific question. This is about all around chart analysis, tips and tricks one must grab, especially at the end of an uptrend. The financial instrument that we are analyzing today is Tractor Supply Corporation, EPIC TSCO. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about all around chart analysis, tips and tricks one must grasp. Happy trading to you all. and speak to you very soon.